How we doing, chat? It's been a while. So right now I'm gonna do a trade recap for Thursday's New York sessions trade, right? So once we go into the session, before 4 p.m. open up, I noticed that 10 a.m. London session it closed bearish, okay? So this gave me a clear bias that New York session was also gonna be bearish, right? Well, not bearish, but I'd rather just get a short position, okay? New York session opens up 4 p.m. What do we see? We see a fair value gap. We tapped into the fair value gap, but we haven't tapped the CE of it. So I'm expecting price to tap the CE of this fair value gap to push down, or in like we could find any other jaws on liquidity over here during 10 a.m. New York session on the 50-minute time frame. I did see a 50-minute fair value gap that we tapped into before pushing lower. I don't know if it was 15. Yeah, I think it was a 5-minute fair value gap that we tapped into before pushing lower. Let me just check one more time. Yeah, there was a 5-minute fair value gap that we tapped into to push lower. So I'm expecting the same type of entry to happen during New York session. And then what happened during New York session? Let's mark out the 1 hour fair value gap first, because the 1 hour fair value gap will literally give us a drawn liquidity inside it that we could target or so. So you mark out that 1 hour fair value gap. Now I'm expecting some drawn liquidity inside this 1 hour fair value gap, like somewhere in the CE of it, or just like literally anywhere. I 4 p.m. opens up. Now I'm looking for any draws on liquidity that we haven't like taken out before our market open. There's a 50-minute fair value gap here, but the CE has already been tapped into. And then anything above that, we see a 50-minute high, and then nothing else in this range. Let's go to the 5 minute. Now in the 5 minute, okay, we do see a lot of draws on liquidity. We see highs, we see fair value gap, we see a lot of stuff. So before we like target these draws on liquidity, what I want to do is mark out the true open, okay? Because the true open really helps us find our um targets, okay? It really finds helps us find our targets, and also to see if we should enter on this draw on liquidity or not. So once you open, right, what draws on liquidity do we see above true open? Yeah, let me just remove this 1 hour fair value gap. Let me mark the true open with the horizontal. Okay, above this horizontal ray, we see this high, we see this other high, we see this high, we see this fair value gap. During London session, we reacted off of a 5-minute fair value gap. So I'm expecting to also react off of a 5-minute fair value gap during New York session. And this is the fair value gap that we got, the nearest one that has not been touched. We later on touched into that 5-minute fair value gap once price open. Okay, so what we want to do right now is find an entry model that we can get into. It's either going to be a rejection wick or a CISD, anything that really presents itself. I believe we entered off of a CISD during New York during London session, meaning we also gotta enter off of a CISD during New York session. Okay, so once we swap that liquidity, I'm now expecting a CISD. We had our first CISD like appear over here, right? So that means we gotta take shots up there. Now, as I placed this position, what did I realize? I realized we had a very big stop. Okay, we had 4.3 stop, a 4.3 pip stop, and that really wasn't favorable. And also, like, we see this fair value gap that got turned into an inverse fair value gap, and then after the inverse fair value gap, we have another fair value gap. This shows that price is not likely to retrace, and we have this bearish candle without a high, okay, without a wick at its high, meaning price is not likely to tap us in right there. Just know at this moment I was looking at like the charts on TradingView, and I later on realized we had a data redundancy. The charts that we're seeing right now is not the charts that I saw on TradingView. There was a mismatch happening. So it's either we could have entered from this high, but this high was not really I mean this low, this CISD was not really showing on TradingView. Okay, we could have um in theory entered from this side, not in theory, but we could have, but TradingView was not giving us the same type of entry. So what did I do? I entered off of this CISD down here. This CISD was good because it was above tree open. Okay, we were going to short above tree open, and that's a very good thing that I do. So I put my limit there, and then for the stop loss I put my stop loss like literally above the highs, so like up here. Okay, and I what's the word, oh yeah, I put like an extra pip of breathing room because I knew spreads were gonna kill me, right? So I put my stop loss at this high, this bearish wick, this bearish candle high, and we got tapped in. We pushed lower. Later on, price went up. We got stopped out because of spreads, but not because of price action. You know, the strategy was amazing. The model was amazing. W execution. The only problem was we had a lot of spreads. Well, trading CFDs, forex. So obviously we're gonna have like, I could say 3 pip spreads. You know, bid and ask price difference or whatever. Yeah, so we got stopped out, and then price later on ran to our TP level. I didn't really get angry or anything, you know. I followed my system. It was beautiful. Really couldn't get mad. The only problem was spreads. You know, I knew I followed my system. I knew everything was okay, you know. We have the next day, and this was Thursday. I wanted to trade during Friday's session, New York session, but I didn't want to because we use quarterly three, meaning Fridays is the fifth day. Okay, we trade in like we trade 4 days: Monday, Tuesday, Wednesday, Thursday. All right, and Friday is not really in the book, in the plan, okay? Because Friday, that's distortion, meaning price will either reverse or continue on that day. Because obviously, see, you obviously here Friday 4 p.m. That's like I wanted to trade on this day, but I just chose not to. I wanted to just follow my rules. Okay, so Friday 10 a.m. we closed bearish and then we pushed upwards bullish. Okay, my bias was bullish, but we closed bearish and then pushed upwards to bullish. And then 4 p.m. what happened? We went bearish and then bullish and then bearish. Okay, so this is what I don't like. As you can obviously see, Friday we're just reversing and continuing, you know, and that really gave us not an ideal price action to trade in. We could have entered on this trade. Like I was planning to take this trade, like this exact trade. Like I literally placed my entry at the CISD, but I just told myself I'm not gonna trade. I'm gonna control myself, and then walked away. Price later on went to the CISD limit. I didn't enter off on this trade. Tapped us, not tapped us in, but just tapped the CISD, pushed upwards. What did it push upwards to? There was a 1 hour fair value gap here. We are targeting the CE of it. Why the CE of it instead of like a high? It's because Friday is distortion, meaning it'll just continue, reverse, reverse, continue. And obviously you can see if we long from here and try to target like a high up here, it wouldn't be sufficient because obviously you can see price just push downwards later on after touching the CE of this like 1 hour fair value gap that I don't have placed right now. Yeah, but yeah, that was today's, I would say this week's trade recap. Okay, I hope you guys really enjoyed. As you can see, yeah, we only took one trade, risk like 40 USD. We got closed off of negative 50 USD. And yeah, man, planning to trade on Monday's New York session instead of London session because I have this new mirroring rule. Like I don't wanna give out too much sauce, okay? Even with this trading session, I fully explain my I wouldn't say fully explain my strategy, but just fully explain what I was going in, like thinking and going through in the market. Like if you try copy and paste what I did in this video, it's not gonna end up well because you need more context into it, okay? I'll see you guys on Monday. I hope you guys enjoy. Take care.